JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 28th of June 2021. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yes, check us out here on jfdbank.com. and click on the research tab right there on the top, guys. So now then, yep, I can see in the chat room here, Erica, good morning to you too. I hope you had a fantastic weekend and you're kind of set for this week already. So jumping back into the charts, some of them are gonna still have the same outlook as last week. Just because not much has changed, but there are some new ones that I'll pick up on in a moment. But basically Nikkei here is one of those that kind of remains the same. We're still trading below this downside line, although Nikkei tried to push higher initially, but yeah, it still ended up closing slightly in the red, and in a way a lot of things here could lead to a bit of negativity, I would say. However, again, although we're below this downside line, we did close in the red for today, but just fractionally. Still, we remain above the 21-day EMA here, so basically for me to consider maybe a bit of a move lower here, I would need to see a drop somewhere below this 28,566 territory right here. At the same time, the index would be placed below the 100-day EMA here, shown as the green line, and yep, this is how it could maybe then open the door for itself towards lower levels. But for the upside here, I need to see I need to see a break of this downside line and then a push above the 29,519 territory. I spoke about that level previously, so I'm still keeping an eye on it. The Shanghai Composite, so also drifted to the downside. However, we might see this one as maybe a bit of a temporary correction here before another possible leg of buying. So in a way, I would say that this idea here is kind of working out. So this idea that I've mentioned before was that if we clear this barrier, the 3,562 territory, if we jump above it and then we stay above it, then yes, this could lead to a possible test of the 3,626 territory, which, as you can see, acted as a fantastic area of resistance. So basically, at the moment, we're seeing that yes, we came closer to that barrier, but yeah, we failed to reach that, and we're currently correcting a little bit to the downside here. So maybe something like this still could be possible. A bit of a retracement here all the way towards that 21-day EMA or even 3,562 territory could still be possible. But yeah, another thing to keep an eye on is this little tentative upside line, which is kind of still we need to keep an eye on it, because maybe maybe the index will find good support somewhere around here and then rebound and push higher. So either way, guys, for now I would say that yes, we will continue targeting the upside. Initially, I'm aiming for this 3,626 territory, but in a way, what could happen as well is the correction here to the downside. If this upside line provides support, yes, we could see a nice rebound. If it breaks, still keep your eyes on that 21-day EMA, because so far it's doing its job. It is providing, it is acting as a good support area. Like for example here, last week on the 24th and the 23rd of June, also back here on the 24th of May. So yep, it is doing its job as a support. So like I said, even if we get a break of this upside line, still keep your eyes on that 21-day EMA. For the downside, I would need to see a drop below. Let me just quickly grab an arrow here. Drop below this 3,550 territory, approximately around here. And then yes, we could see this one drifting lower here. At the same time, we would be placed below the 21-day EMA, and potentially more sellers could join in. Now, in a way, actually, I'm not going to drag this one way too much to the downside. I'm just going to initially aim for the current lowest point of June, near the 3,503 territory. Around here, we do have the 100-day EMA shown as the green line, which could also maybe provide a bit of a hold up here. So yeah, that's the kind of game plan. So let's continue aiming to the upside, but again, we'll have to take into consideration these few elements that I just mentioned. DAX, the German index. So we are stuck here, I would say. We are trading still below this little short-term downside resistance line taken from the high of the 15th of June, and yeah, this downside line is kind of doing its job. Last week we saw the index, just bear with me one moment, let me just have a look at the yeah, there we go. So we saw the index closing near the 15,608 zone. Currently, if we take a look at the cash index, we'll see that the price is actually just kind of bang on around that level. So we're still below the downside line, basically. So we're keeping an eye on this one, of course, on the slightly shorter time frame. And let me just, this is where I'm going to reuse this this upside line. So basically, we're also kind of forming a potential triangle pattern right here, this way. So in other words, we cannot really kind of, let's say, get comfortable right now with either of the sides, because we need to see a clear breakthrough one of those lines here, and yep, then we could consider the next short-term directional move. So currently, basically, long story short, we're stuck in a triangle. We need a breakout. So once we get the breakout, then we could consider, yeah, as I said, the next short-term directional move. Nasdaq 100. So looking at this picture, last week on Friday, we failed to reach the all-time high. We've hit that on Thursday, and that was the area around the 14,429 territory, approximately around there. Then the index drifted lower. However, looking at the cash index right now, we'll see that the price is stuck in between these two levels. So we're above the 14,337 zone. Excuse me, and we're below this 14,429 territory. So basically, we're kind of stuck in right here. If you want to consider the upside, certainly a break of the current all-time high is required, just to be a little bit more on the safe side. If the index starts drifting back below this 14,337, yes, we'll consider a bit of a larger correction here to the downside. We'll keep an eye on this upside line right here, taken from the low of the 19th of May, and in a way it could also provide a bit of a support. So if it holds, yes, a nice rebound here could be possible, but if it doesn't hold, then yes, this is where we could start maybe looking at some lower levels. The dollar index, so again, the same story, I mean the same issue here, the one that I've mentioned last week. Basically, we are stuck here still. We're stuck below this 200-day EMA, so in a way, kind of everything's, I would say, a few things are leaning here a little bit more towards the downside. However, the fact that the index cannot really move away from this 200-day EMA, that kind of makes us a bit worried here. So I would say for now, as long as the 200-day EMA continues to provide resistance, yes, we could still see a bit of a move to the downside here. And then, yes, what I'm going to consider here as well is if we find support somewhere near this 91.42 territory, yep, a nice rebound here, back up could be possible, and yep, we could go for further upside. Now, in terms of, let's say, if this decides not to correct lower and decides to pop earlier above this 200-day EMA, then in that case, I'm keeping an eye on this barrier right here, the 92 zone, and yep, then if we clear that, then higher levels could be met, guys. So let's keep an eye on that one. Jumping into gold. So gold also still the same game plan remains. I mean, we are looking here for maybe a bit of a corrective move here to the upside, and then maybe another slide lower. So basically, if this area somewhere around this psychological 1800 zone provides good resistance, or maybe even this 200-day EMA, if all that, yes, it provides good resistance, then another slide still could be possible here. If this decides not to travel higher and it starts pushing lower again very quickly here, so yep, a drop below the 1765 territory could open the door towards lower levels. Now, jumping into Brent oil. So yeah, Brent, it's stuck here again. I mean, we're currently forming something of a shooting star here, but yeah, let's see if that's going to be the case. I mean, if that's going to be seen as a reversal signal. However, as I've mentioned before, sometimes these don't work, and we need to be still very careful here. Of course, a lot of you are probably hoping maybe for a bit of a corrective move here to the downside. However, so far we have not received our signal here for a larger correction, so that's why I would say even as long as it stays above this upside support line taken from the low the 21st of May, yes, we will continue aiming for the upside. Now, Ethereum, this one's a tricky one, but it's interesting at the same time. So we're kind of stuck below the 200-day EMA and below this short-term tentative downside resistance line taken from the high of the 16th of May right here. And yeah, so for now, I would say keep your eyes on this, on this downside line. I do understand that it's a bit of a tentative one, but nevertheless, keep your eyes on it, and probably keep your eyes more on the lowest point of May here, near the 1732 zone. And if we get a nice drop below it, then this might open the door towards a larger correction here to the downside. And the reason why I'm saying correction, because we are still trading above this upside line taken from the low, the 4th of November. For the upside, what I would like to see here is a move back above the somewhere above this 2,258-59 territory in order to get a little bit more comfortable with the upside. So basically, for now, yes, keep your eyes on this barrier. This is marked by the low of the 12th of June. Also, it's not far from near the highs of the 19th, 20th, and 21st of June. So yep, if we clear that barrier, then yep, potentially more buyers could join in. Now, jumping into a few pairs very quickly, and yeah, before I continue with the pairs, just a quick update on what's happening with the calendar today. To be honest, not much. So it's a relatively quiet day today in terms of economic data. Tuesday will be a bit more interesting. We'll have a few figures coming out from Europe and US as well, like the CB consumer confidence. Then we'll start. Then from Wednesday we'll start getting much interesting because we will start getting the UK's GDP figures. Then we'll have the some figures from China. That's going to be quite interesting to see how the manufacturing and non-manufacturing numbers are going to show up. And of course, then yes, going further, we have the NFPs this week. So yeah, those ones are going to be in the agenda. We'll see how the markets are going to behave, because let's say we might see some activity today or tomorrow, then it could calm down a little bit and then kind of basically save itself for Friday's NFP numbers. So yeah, like the things like that have happened before. So let's see how that's going to be this week. But yeah, for now, basically, let's go from what we have at this point in time. And if we take a look at AUD CAD, so we have a pair which seems to be willing to make a move higher, however is struggling with this 21-day EMA still. So looking at the recent history here, you can see that we keep getting these overshoots, but at the end of the day, the pair remains below and stays below the 21-day EMA. So for now, I would say I would be a little bit careful here, although there is a chance for this one to push higher, because given that we recently also formed a higher low here, then yes, higher levels could be met. However, I would like to see the daily candle at least staying above the 21-day EMA first, and then I could go for a bit of a larger correction here to the upside towards this downside line. If in case this continues to provide resistance, the 21-day EMA, continues to provide resistance, then yes, a slide lower could be possible. We could see a move towards the 0.9236 territory, a break of 0.9284 territory, sorry. And then yes, a break of it could open the door towards lower levels. Now jumping into USD CHF, so here it's an interesting one. So you can see that this 0.9165 territory continues to provide support, although we keep getting these little overshoots here, but in a way it seems to be that this idea is kind of working out. So what I said before, that we might see a drift lower here, we might see maybe a test of the area near the 200-day EMA, and if that provides good support, yes, another move higher could be possible. So for now, that's what I'm keeping an eye on here. And if we continue to trade above this hurdle, above the 0.9165, then yes, another push higher could be possible. However, be very careful and keep your eyes on DXY. In terms of it being a little bit more cautious, maybe, then what you can do here, if you're looking for some upside, then you can keep an eye on last week's, or should I say, not last week's, but the current highest point of June near the 0.9239 territory. A nice good pop above it, yep, may open the door towards further upside. USD JPY, very quickly on this one, still trading above this upside line, taken from the low, the 6th of January. So, but as you can see, it found resistance near the highest point of March of 2021, it drifted back down. Although, yes, we overshot that level initially. We created a new high for this year, but yeah, for now, overall, you can say that this barrier is doing its job. So, I would say like this then, as long as it stays in this little territory below this barrier but still above the upside line, I will remain neutral. If we climb above this 110.97 territory, then yes, I'll start aiming for the upside, especially if the daily candle remains above this barrier. GBP USD. So we have fallen back down, and we have fallen back below this upside line, which, to be honest, I will get rid of now, because again, we have violated it twice, and kind of it doesn't really carry. It seems that it doesn't really carry any significance. So what I'm going to do here right now is going to stick to some of these EMAs. So we can see that the 100-day EMA is providing a good job here and doing a good job, and it's holding the rate lower. Now, if that EMA continues to do that, then certainly, yes, if we could see a bit of a decline here. However, also depending on DXY and how that will play out, but and of course on the GDP numbers, that's what's going to be quite important to keep an eye on. So check out the calendar for that, and UK's GDP, of course. For now, I would say I'll take a neutral stand on this one. And for me, let's say to consider maybe the upside, I would like to see maybe a push somewhere back above this 1.40 territory. But even then, I will be very careful near this downside line. For the downside, let me just quickly check this line here. So for the downside as well, we have this upside line which could provide support, and I would say that if we drop below this hurdle, this 1.3872 zone, which is currently providing support, then yes, a bit of a decline here initially towards the 1.38 territory could be possible, and then of course we'll aim lower if we clear that area, and we will target the this upside line taken from the low of the 18th of May of 2020. GBP and ZD. So this one, I haven't looked at this one for quite a while, but as you can see, after we found resistance near this hurdle right here, near the 1.9960 zone, so as you can see, we fell just shy from a few points, kind of a few points from reaching the psychological 2 level, and you can see that the pair drifted back down, back below the 21-day EMA, but currently is finding support near this 1.9609 territory right here, which we'll keep an eye on closely. If that gets broken, this could lead to a larger correction to the downside, because don't forget that we're still trading above this upside support line taken from the low of the 7th of January. So yep, we could still see a nice rebound here back to the upside, but again, at the moment, from the very short-term perspective, we'll be very careful here with the upside. We'll be leaning a little bit more towards the downside, especially if the pair drops below this 1.9609 territory. Euro against the Turkish lira, guys. So this is something that I sometimes like to have a look at. So because these exotic pairs do tend to kind of be sometimes very technical. So here, for example, after we broke the downside line, this is what I said to you, that I'm going to keep an eye on this downside line taken from the high of the 4th of June, and it might travel higher here, but if it retraces, and this is where the point where this downside line did kind of act as a bit of a trampoline here, and we saw a nice reversal here back up. However, this barrier so far, this 10.4546 territory, is providing a good hold up. We did get a few overshoots, but we didn't really get the daily candle staying above this. So if we do get that, then yes, we will aim for the upside again. But another thing to kind of show you here as well is a nice little technical picture. Basically, we have ourselves a nice little ascending triangle, which of course, according to all the TA rules, tends to break to the upside. So long story short, basically for now, I will keep an eye on this upside line. I'll keep an eye on this 10.46 barrier, and if that gets cleared, certainly then I'll aim for higher levels. For the downside, I need to see at least a drop somewhere below this 10.24 territory right here in order to get a little bit more comfortable with lower areas. Now, Euro against the CHF. So this one's, I have looked at this one recently, but basically just wanted to give you a quick update. So that still, I am looking for a possible test of this upper side of the falling channel that we are currently trading in. So, yeah, at the moment, that's going to be my game plan here. I'm going to be keeping an eye on this line, yeah, so for now, basically let's see how this is going to play out. If we get a nice test of this upper side of the falling channel, then the big question here is, can we break it? And can we break it and stay above it? If we can, then yes, higher levels could be met. But if we cannot, then yep, another slide could be possible. And finally, EURUSD. So yep, the pair continues to struggle with this 200-day EMA together with the 1.1943 zone. If that is going to continue to hold here, then certainly we might not even see this this push higher here. But of course, if DXY, if you remember here, if DXY will drift to the downside here, then yep, we could see EURUSD popping above this 200-day EMA and potentially ending up testing the lower side of this former falling channel pattern, and then of course we'll take it from there. But at the moment, guys, I would say that as long as the 200-day EMA continues to provide resistance, yes, another slide could be possible. So let's keep an eye on that, guys. So, that's it for the session. I hope you found it useful, guys, and thank you very much for joining in and watching this one till the end. I really appreciate your time, so thank you very much for that. If you want to catch me tomorrow morning, as always, at my Trader's Espresso, again, the 6 o'clock GMT time. For now, guys, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. So, thank you very much, and bye-bye.